Borregaard ASA, in collaboration with Must Invest and Hatland Group, is acting as a guarantor for a 200 million Norwegian kroner convertible loan to Alginor, a company focused on alginate production. This loan, which can be converted into new shares at 10 Norwegian kroner per share with possible adjustments for corporate actions, is part of a broader financing package. Borregaard's financial commitment ranges from 83 Norwegian kroner to 111 million, to be distributed in 2 installments in October 2025 and February 2026. The financing package also includes an uncommitted tap facility of 100 million Norwegian kroner and a secured loan facility of 230 million Norwegian kroner from Haugesund Sparebank. The funds are intended to support Alginor's development of a commercial-scale demonstration plant for alginates, which have applications in industries such as food and pharmaceuticals. This investment reflects Borregaard's strategic focus on partnerships and innovation within the biochemicals sector, potentially enhancing its growth prospects. The involvement of Haugesund Sparebank and the comprehensive financing plan indicate strong institutional confidence in Alginor's business model and potential for success, which could positively impact market sentiment and investor confidence in both companies.
In a significant transaction within the Indian retail sector, SBI Life Insurance, Aditya Birla Mutual Fund, Morgan Stanley, Goldman Sachs, and other notable financial entities have acquired a 6% stake in Aditya Birla Lifestyle Brands Limited, ABLBL, for 998 crore rupees. This acquisition involved purchasing over 7.31 crore shares from Flipkart Investments, marking Flipkart's complete exit from ABLBL. The shares were bought at an average price of 136 rupees and 45 paise each, highlighting investor confidence in ABLBL, which owns prominent brands such as Van Heusen, Louis Philippe, Peter England, and Alan Solly. Following the transaction, SBI Life Insurance increased its stake in ABLBL to 3.65% from a previous 2.23%. The divestment by Flipkart, a major player in the e-commerce space, aligns with its recent strategy, as seen in its earlier exit from Aditya Birla Fashion and Retail, ABFRL, in June. The stake acquisition by these financial heavyweights has positively impacted ABLBL's market performance, with its shares rising by 7.01% to close at 146 rupees and 1 paisa on the NSE. This move underscores a strategic shift in the ownership structure of ABLBL, potentially influencing its future business strategies and market positioning. Additionally, the transaction reflects broader market trends where institutional investors are increasingly focusing on established retail brands with strong consumer recognition and growth potential.
Gold prices in New Delhi surged by 2,700 rupees to reach an unprecedented 123,300 rupees per 10 grams, driven by heightened safe haven demand amid global economic uncertainties. The All India Sarafa Association reported this significant increase, with gold of 99.9% purity, previously closing at 120,600 rupees. This rally in gold prices is attributed to ongoing concerns about a potential prolonged U.S. government shutdown, which has fueled investor interest in the precious metal. Samil Gandhi, a senior analyst at HDFC Securities, highlighted that the bullish momentum in gold is supported by favorable market fundamentals and investor anticipation of further gains. Similarly, silver prices experienced a substantial rise, climbing by 7,400 rupees to a new high of 1 rupee, 57,400 per kilogram. This marks a 75.47% increase in silver prices over the current calendar year. Internationally, spot gold prices rose nearly 2% to an all-time high of $3,949 per ounce, while silver increased over 1% to $48 per ounce. Analysts, including Kainat Chainwala from Kotak Securities, noted that the ongoing U.S. government shutdown has delayed critical economic data releases, adding to the uncertainty and bolstering bullion demand. Looking ahead, investors are expected to keep a close watch on key market indicators, such as the Federal Open Market Committee meeting minutes and speeches from Federal Reserve officials, which could further influence market sentiment and precious metal prices.
Blink Charging Co., Nasdaq Blink, experienced a notable surge in its stock price, rising by 10.25% to $2.20, following the announcement of a partnership with the West Yorkshire Combined Authority, WYCA, to establish a regional electric vehicle EV charging network in the UK. This collaboration involves a £1.41 million, $1.9 million initiative supported by the UK government's Local Electric Vehicle Infrastructure Pilot Fund, LEVI, to deploy 716 charging stations across West Yorkshire. The project aims to cater to diverse charging needs with a mix of standard, fast, and rapid chargers, facilitating EV adoption and supporting the region's 2038 net zero carbon target. The development is significant for Blink Charging as it enhances the company's international footprint and aligns with global efforts to increase EV infrastructure. The initiative is expected to bolster market sentiment towards Blink, evidenced by the stock nearing its 52-week high. Additionally, the UK government's incentives, such as discounts on new EVs, underscore a broader strategy to make EVs more accessible, potentially increasing demand for Blink's charging solutions. This follows a recent contract win in Richmond, further indicating Blink's expanding presence in the EV charging market.
Fishman J.A. Limited (MI) has reduced its stake in Pfizer Inc. (NYSE) PFE by 2.4% during the second quarter, as disclosed in their latest 13F filing with the Securities and Exchange Commission. This adjustment leaves the fund with 275,531 shares, valued at approximately $6.68 million, making Pfizer the 26th largest holding in their portfolio. Despite this reduction, institutional investors and hedge funds continue to hold a significant 68.36% of Pfizer's stock, reflecting sustained interest among large investors. Pfizer's stock has seen varied analyst ratings, with a consensus hold rating and an average target price of $28.41, according to MarketBeat.com. Notably, Bank of America and Morgan Stanley have recently increased their price targets to $30 and $33, respectively, maintaining a neutral and equal weight stance. Pfizer's recent earnings report surpassed expectations with a reported EPS of 78 cents, significantly higher than the consensus estimate of 58 cents, and a 10.3% increase in quarterly revenue compared to the previous year. The company's strong financial performance, coupled with its diverse portfolio of biopharmaceutical products, continues to support its market position despite the modest reduction in holdings by some investors.
Investors Asset Management of Georgia Inc. GAADV has modestly increased its stake in Pfizer Inc. NYSE PFE by 0.7% during the second quarter, now holding 95,272 shares valued at approximately $2.31 million. This move aligns with a broader trend among institutional investors, such as Confluence Wealth Services Inc. and Cullinan Associates Inc., who have also expanded their positions in the pharmaceutical giant. Pfizer, a key player in the biopharmaceutical sector, has been under the spotlight with a mixed consensus from analysts, reflecting a hold rating and an average price target of $28.41. Pfizer's recent financial performance has shown resilience, with the company reporting a quarterly earnings per share, EPS, of 78 cents, surpassing analysts' expectations by 20 cents. The company also posted a revenue of $14.65 billion, a 10.3% increase from the previous year, suggesting strong operational execution. Despite these positive results, the stock opened at $27.37, indicating some market skepticism, potentially due to broader market conditions or sector-specific challenges. Analysts maintain a cautious outlook with a range of neutral to hold ratings, reflecting uncertainties in the pharmaceutical landscape and Pfizer's strategic direction, particularly in its COVID-19 related product lines. Pfizer's strategic focus remains on its diverse portfolio, including cardiovascular, metabolic, and infectious disease therapies, with an emphasis on its COVID-19 products like Comirnaty and Paxlovid. The company's forward guidance for fiscal year 2025 projects an EPS range of 2.900 to 3.100, underlining its confidence in sustained growth. However, the market's tepid response suggests investors are weighing the potential risks and rewards, factoring in competitive pressures and regulatory landscapes that could impact future profitability.
During the second quarter of 2025, Merck & Company, Inc., NYSE, MRK, experienced significant activity among institutional investors, with both reductions and new stakes in the company's stock. Investors Asset Management of Georgia Inc., GAADV, decreased its position by 2.8%, holding 17,791 shares valued at approximately $1.4 million. Similarly, Fishman J.A. Limited, MI, reduced its stake by 18.8%, now holding 115,436 shares worth about $9.14 million, making it the 23rd largest holding in their portfolio. This trend of portfolio adjustments is echoed by major investors such as Vanguard Group Inc., Wellington Management Group LLP, and Charles Schwab Investment Management Inc. Despite these changes in investor positions, Merck demonstrated strong financial performance in the second quarter, reporting earnings per share of $2.13, exceeding analyst expectations of $2.03, and generating $15.81 billion in revenue. The company maintains a robust return on equity of 41.05% and a net margin of 25.79%. Merck's market capitalization stands at $222.93 billion, with a P/E ratio of 13.75 and a dividend yield of 3.6%, supported by a quarterly dividend of 81 cents per share. Merck's stock opened at $89.25 and has been subject to mixed analyst ratings. Berenberg Bank downgraded the stock from buy to hold, adjusting its price target from $100 to $90, while the average analyst consensus remains a hold with a price target of $106.41. The cautious analyst sentiment reflects recent downgrades and revised price targets from institutions like Wells Fargo and Company, potentially impacting Merck's stock performance in the near term. Strategically, Merck continues to focus on its core segments of pharmaceuticals, vaccines, and animal health, which are vital for maintaining its market position amidst fluctuating investor sentiment and analyst evaluations.
Investors Asset Management of Georgia Inc., GAADV, has increased its stake in GE Aerospace by 2.0% during the second quarter, owning 11,753 shares valued at approximately $3,011,000. This move reflects a broader trend among institutional investors, with significant acquisitions by firms such as GQG Partners LLC and Nuveen LLC, who have made substantial investments in GE Aerospace earlier this year. Currently, institutional investors hold approximately 74.77% of GE Aerospace's stock, underscoring the strong institutional confidence in the company's future performance. GE Aerospace, a key player in the aerospace sector, has shown robust financial performance with a notable year-over-year revenue increase of 21.2% in its latest quarterly earnings report. The company reported earnings per share (EPS) of $1.66, surpassing analyst expectations of $1.43, and set its fiscal year 2025 guidance at 5.600 to 5.800 EPS. Despite a recent downgrade from Wall Street Zen to a hold rating, several analysts maintain a buy stance, with Jefferies Financial Group raising its price target to $350. The stock's performance, with a current price of $297.40 and a market cap of $315.38 billion, reflects strong investor sentiment and confidence in the company's strategic direction and market position.
Chubb Limited, NYSE, carbon monoboride, a prominent player in the financial services sector, has seen recent activity from institutional investors, including Confluence Wealth Services Inc., which increased its stake by 0.5% in the second quarter of 2025. This follows a broader trend of institutional interest, with firms like Gratis Wealth Advisors LLC, Valio Financial Advisors LLC, and Davenport & Company LLC also augmenting their positions. Despite this positive institutional sentiment, Chubb's stock has faced mixed analyst ratings. Notably, HSBC downgraded the stock from buy to hold, adjusting its price target from $317 to $300, reflecting a cautious outlook amidst market volatility. Chubb's recent financial performance has been robust, with the company reporting a significant earnings beat of $6.14 per share for the last quarter, surpassing analyst expectations of $5.84. This was supported by a 6.3% year-over-year revenue increase to $14.20 billion, showcasing strong operational efficiency with a net margin of 16.08% and a return on equity of 12.34%. Despite these solid fundamentals, the stock's price performance remains tempered, trading at $283.99 with a moderate dividend yield of 1.4%. The company's financial metrics, including a price-to-earnings ratio of 12.53 and a PEG ratio of 3.20, suggest a stable yet cautious growth outlook amid broader market uncertainties.
Southern Company, NYSE, SO, a prominent player in the utilities sector, has recently seen a modest increase in institutional interest, as evidenced by Confluence Wealth Services Inc. boosting its stake by 1.2% during the second quarter. Confluence now holds 15,575 shares valued at approximately $1.43 million. This reflects a broader trend among hedge funds and institutional investors, with a notable increase in stake acquisitions from firms such as Ameriflex Group Inc. and Cheviot Value Management LLC, indicating sustained confidence in Southern's market position. Despite analyst expectations, Southern's recent earnings report showed a slight miss, with earnings per share, EPS, of 91 cents against a consensus estimate of 99 cents. The company's quarterly revenue, however, rose by 7.9% year-over-year to $6.97 billion, surpassing expectations. Analysts have varied outlooks on Southern, with target prices ranging from $92 to $102, and a consensus rating of hold. Southern's stock performance remains stable, trading at $94.56, close to its 12-month high, supported by a strong market capitalization of $104.01 billion and a consistent dividend yield of 3.1%. The company's strategic focus on expanding its renewable energy projects and maintaining robust gas distribution operations across several states positions it well for long-term growth. However, the slight dip in EPS and insider trading activities, such as CEO Kimberly S. Green's recent stock sale, may warrant close monitoring by investors. As Southern continues to navigate market dynamics, its financial health and strategic initiatives will be crucial in shaping investor sentiment and stock performance moving forward.